Oh yeah, you best believe subprime is here and it's in Canada. That was the that was one of the major factors that was the cause one of the major factors that caused the housing crash in the United States was this bundling, right, of AAA rated mortgages and all this stuff, but throwing a whole bunch of bad ones, like very dubious or deceptive loans and mortgages to people that probably are pretty precarious in their own economic or financial situation. But like I say, these banksters, because there's no moral hazard anymore, because they understand, oh, well, the central planners will just bail us out, right? Just like they did after the crash in 2008 in the U.S. So, like I said, these people don't even want to try to even attempt to hold themselves to account anymore or to practice more ethical business standards and practices, because they recognize there's a big giant safety net of taxpayers just waiting to prop them up or protect them from any of their malinvestments or bad deeds, misdeeds. Financial Post investing. Bank of Montreal bundles uninsured mortgages in a first for Canadian bonds. So this is even tied right into the bond market, Canada. Like I say, this stuff, it's all going to come to a head at some stage again. Now, the Canadians are way late to the game, as per usual. The Americans have already gone through the bulk or the most profound part of their pain and suffering, and it's kind of being a little bit relaxed now because they're trying to sort out and straighten out their houses. Canadians are like, they don't even want to anymore. They're like, no, just keep extend and pretend. Give me more credit rating. Give me a longer credit line. Hey, my house is valued more. Give me more to borrow against now, because, well, my house is worth more, so I want to borrow against it. It's that extend and pretend. It's just like if you kept getting the bank kept giving you an increased rate on your credit cards, well, you can extend for another month. Maybe if they give you a really high interest or increase in your limit, you might be able to extend yourself for a whole year. Keep paying out minimum payments, right? So it's all about extend pretending. But at the end of all that extend pretending, not only is your original debts outstanding, but now you've accumulated and amassed a whole lot more debt because you extended and pretended, and you've put it off further. So now that's even longer into your life, even longer into the future, that you're going to have to pay for all these bad investments or your pretense of your supposed wealth that you've built up in your house. Like I say, this is just one article so far that I'm seeing where they're reporting this, although I'm pretty sure this has been standard practice for a little while. I can't say this with any definitive proof or conclusive stats or figures to back up what I'm saying. But let me just read a little bit here so you know what we're talking about. Bank of Montreal is bundling nearly $2 billion of prime Canadian mortgages into securities in a first-of-its-kind deal as the government looks to reduce support for the fast-growing housing sector. The bonds are backed by prime residential mortgages that are not insured by the government. Canadian banks have historically packaged federally guaranteed loans into bonds, but last year the nation tightened access to taxpayer-backed mortgage backing in an effort to help tamp down rapid home prices growth in areas like Toronto and Vancouver. The mortgage-backed securities offering is the first from a major Canadian bank to bundle uninsured prime mortgages. This is a really unique deal in the Canadian market, Richard Hunt, analysis at Moody's Investor Services, who rated the deal, said in an interview. Given the pent-up demand that we think is out there on the part of banks and non-banks to have a vehicle to fund their residential mortgages, to have an RMBS market, we think this could be a significant transaction. So, like I say, I'll post the rest of this article. I'll link to it in the description of this video below so you continue on to read it. But even though these ones they're saying they're prime, but they're uninsured, right? They're not insured. So when you bundle ones that are insured and uninsured, it's just putting them all into one big pool. And if you buy them up, well, if there's no insurance, like I say, I don't know completely how that whole subprime thing down in the U.S. played out. I probably need to learn a little bit more to perfect myself as far as how it played out. But this sounds very much in line with the kind of shit that they were talking about down there before the housing market crashed. If you got any further information, leave a comment below, because like I say, I'm always looking to learn. If I'm misrepresenting myself in any way or not understanding properly some of the things they're talking about, if you can help clarify my mind or my thoughts, it's always greatly appreciated. There is so much that's outside of the privy of my knowledge, so I am always open to feedback and other people's input, because that's how we help educate and inform each other, by doing so. It's Canadian Libertarian. I love liberty.